Hello everyone, this is the trading team at Trade Oxygen here. Today we took an amazing 1 to 3.5 risk to reward trade. Let us see how we took that trade, a full A to Z breakdown. Welcome to another post-market analysis on how we make money, day trading series, Friday 11th of October, micro E-mini NASDAQ index futures. Okay, looking at the economic calendar, we can see at 8:30 we had high impact news, which is good because we can expect volatility in the market. So that's great for us. Let's see what's next. Okay, we are in the daily chart now. You can see so we are analyzing this date, and you can see in the previous 3 days, we had up close 2 days up close candles, and this one also overall though it's bearish, the price has been moving up, taking the highs of the previous day. So what was our bias for the day? So today, when we started the trading session at the trading team at Trade Oxygen, we noticed that there is also buy side liquidity above this previous daily highs, and market has been pushing up. So our overall bias for the day was a daily bias, because there's a chance when you see a situation like that, the price going and grabbing the buy side liquidity residing above here. What else? Let's see. So we were expecting the price today to go and grab the highs of the previous day. Okay, so overall it did not grab the previous day highs, but it gave us the directional bias to be bullish during the day. Okay, let's see what's next. Okay, so we are in the 1 hour chart. So we can see this red line, which is a previous high, a previous daily high. And we can see in the 1 hour chart, it has been acting as support. So let's go and have a look at that daily high, the red line. This is that daily high you can see in the daily chart. So, and now in the 1 hour, it's acting as support. So let's go back to the 1 hour again. Okay, so we are back in the 1 hour chart now. So what do we see here in the 1 hour chart? So what we see is on a recent previous day, you can see which was Thursday, there was a price leg up and there was a retracement, and we grabbed a trade entry here and which made profits. Look at our previous video, you will see we made profits. And today we can see the price, okay, this price leg up, a retracement, and we can see when it came to Friday, actually this was on Wednesday, retracement on Thursday, we took entry here, and now today Friday. Then Friday, we can see there's a retracement again. So which now we are looking for daily bias of buy entries, bullish. Okay, so let's see what's next. So then when we draw the fib tool from this to this point to this point, this price leg, we can see today on Friday the price has retraced at the time of New York start into 79% fib, which is it went below but it made wicks. So when we see the wicks, it is also supporting for us for a buy entry because price is pushing up, and also price pushed up again into 79 and again closer to 70 in the fib retracement, which gives us a supporting close for a buy side entry. Let's see what's next. Also, the price is near a 1 hour fair value gap, which is this box over here. So which is also a supporting close for us for a bullish entry. And just above this fair value gap, we can see there is a swing low, which means there is sell side liquidity. So when you have sell side liquidity just above or near a fair value gap, that makes the fair value gap more attractive, like so that because the smart money can grab the sell side liquidity and then push the price up. So that's the logic here. So we trade with sound logic at Trade Oxygen. And if you are not clear about any of the terms we are telling now, don't worry. We will subscribe to the channel and click the bell icon. We release simple videos explaining all these concepts. For now, look how we analyze the markets with a sound logic. Okay, so because of that sell side liquidity, it makes this fair value gap strong. Not only that, also we can see there's a 1 hour order block candle here, this ash color area. So which means this area is perfect for a buy entry with our daily bias, bullish daily bias. Not only that, also we can see in the fib tool, even in this fib tool, when you are here, it's below 50%, which means the price is at a discount now. So that is also another clue for us for a buy entry. So it's a discount in this price leg. Also, it's a discount if you consider this price leg up from here to here, the price is at a discount. So those are all clues for us to support a buy entry, because when the price is at a discount, there is a chance where price can go into a premium, which is what happened, right? So because of that, the trading team at Trade Oxygen, when the New York market started around this area, we were looking for a buy entry. Okay, so for that we have to go to low level charts. So we'll go to the 15-minute chart now and let's see what's next. Okay, so now we are in the 15-minute chart. This is that same price action, but you can see more candles now because we are in the 15-minute chart. So this was the Wednesday price leg, retracement Thursday, and again the retracement on today. And this is the area we were talking. And now let's expand this area a little bit to see more details, because it's enough for us to look, let's say, it's enough for us to look at this area now for our price action analysis, for us to see if there is any buy entry. So we'll be focusing on this area now. Okay, let's see what's next. Okay, so in that area, in the 15-minute chart, this yellow line is the 8:30 a.m. New York time. You can see when the news released, the high impact news, there was huge volatility and it made a candle with indecision. It pushed up and then it pushed down at 8:30, which means there's volatility. And when it pushed down, it is, and the price pushing down after that until 9:30, after 8:30, this is the 9:30. So you can see this area, the price has been pushing down. So what does that mean? So after the news, this price pushing down before the New York start is part of the power of three concept, ICT power of three. And this part is the part of the Judas swing. So the Judas swing is a false move. And when we are having a daily bullish bias and when we are looking for a buy entry, we are looking for a Judas swing, the power of three, where accumulation, manipulation, and the distribution happens. So accumulation of orders, you can see there's a range. Then the manipulation happens where the traders will be trapped because some traders will be misled to go short here. So the algorithm does that, and the smart money will use that as opportunity to buy because they have large quantity of buy orders. So below this range, uninformed traders consider this area below this as support. So there is sell orders here. Also, when the price come down this range, uninformed traders, the breakout artists think the price is breaking down, so they start selling. So there's a huge pool of sell side liquidity here. So the algorithm will take the price up after that and will give the smart money traders, meaning the banks and large institutions, the opportunity to grab more buy orders here. So the Judas swing, the false move, gives us a clue that okay, it's a good opportunity for us to buy in this area. Okay, let's see what's next. Okay, So while the Judas swing is happening, you can see as we explained in the 1 hour chart, now price is at a good discount point, so that it's a good opportunity for us to buy. Those are the clues we at trading team at Trade Oxygen are looking for. And also you can see the price, when it came down, it is coming into a 15-minute fair value gap as well. It's too small for you to see, but there's a 15-minute fair value gap here. You can see we trade with sound logic, proper logic. So now when the price reaches a 15-minute fair value gap, not only that, we, the trading team at Trade Oxygen, also noticed that there is a order block, 15-minute order block. This is that same exact 1 hour order block, but now you can see more candles here. So order block and this fair value gap, the 1 hour fair value gap, this 15-minute fair value gap, and this order block all can act as support. Support, if you consider like a support resistance there, this is not support and resistance, but it acts as support for the price. What does that mean is there is a probability increase of taking a buy entry over here. So also we expect the price to respect this 15-minute order block, at least the midpoint we expect. Price did not come to the midpoint, which is good. So which means this is acting as strong support, this fair value gap and the order block. Not only that, okay, so there's some interesting thing. So let's see what's next after that. So this Judas swing grabbed liquidity, sell side liquidity residing below the London lows, and it also grabbed liquidity, sell side liquidity residing below this range. So below this range there's a lot of sell side liquidity. Below the London lows there's sell side liquidity, as I explained earlier, meaning sell entries are there. So the Judas swing grabbed all that. That is a liquidity grab. So when we see a liquidity grab, that also is a clue for us to take a buy entry. So with those points, now we are going to a low level time frame to see where our trade entry is, and all the points I mentioned is supporting our daily bias of bullish. So with that, let's go into the 1 minute chart. Okay, so let's see what's next. Okay, so now we are in the 1 minute chart, and the signature of the price action we were looking for is an internal market structure shift. So you can see the price in the 1 minute price was making a lower low, and you can see a lower high in this swing leg. Like if you think this as a price swing, making a low, then making a high, then making a low, making a high, making a low. So these highs are lower highs and it's lower lows because the price was coming down in the Judas swing. And in the 1 minute, when we see this displacement up, and when that breaks this internal swing high, it is a bullish market structure shift for us. So that's what that's the clue we wanted. That like it's lot of confluences we are looking for here. So that's one confluence we wanted for us to take entry, and we see the displacement here. So with that, we placed our entry in this area. Okay, so let's show you that part. Okay, so this is the area where we placed a buy order, and the question is, why did we place our buy order over here? Okay, so once the market structure, bullish market structure shift happens, we can see there's one black bearish candle pushing down, and then again price pushing up. So in a situation like this area, if all are aligned with a bullish bias, this area that could act as support, but it's not strong support. However, what I'm telling is this black candle and push up, this black candle, the bearish candle, we can consider it as a, let's say a simple, like a mini order block. It's not a strong order block. the strong order block is this one over here. So it can act as a sub order block, but we are not trusting that. We trust these candles down as our 1 minute order block. So we got the 1 minute order block and it could act as support. So that's one reason why we place the entry here. However, the price could go down into the midpoint of the order block, which is what happened here later after we placed the order. We placed the order here, the price came down, which means we were at a drawdown at one point. We were at a drawdown. However, we placed the stop loss below this swing low here, our stop loss. Now the question is, okay, we placed the order, uh, uh, we placed the order over here, trusting this order block, but stop loss below this for safer side. Now the question is, in this displacement, there were no fair value gap. So usually we wait for a price imbalance or a fair value gap, and that is where we place our trade entry, but we don't see a fair value gap here. Why is it? So it's very interesting, right? Why did we place that? Okay, so let's see why we place the entry even if there's no fair value gap. Okay, let's see what's the reason for that. So the reason for that was, at that time period, you could see the Dow Jones were making higher highs in the 15-minute chart, and S&P was making higher highs in the 15-minute chart. But at that point, you can see the NASDAQ was making a higher. So let me say like this: the Dow was making higher lows actually, right? To correct it, higher lows. See, this low is higher than that. Then this S&P also make a higher low, like this low is higher than higher low. Okay. However, the NASDAQ was making a lower low. So this is a higher low. S&P making higher lows, but NASDAQ making lower lows, which is a bullish SMT divergence. Why? Because what NASDAQ is doing is it's accumulating positions. So that gave us a clue for a bullish SMT divergence. And because the Dow has started to move already, S&P has started to move already, then we expect the NASDAQ also to follow that. So that's the reason why we placed our entry without the fair value gap. Okay, so you can see once we place the trade entry over there, the price came and grabbed our trade entry, and we were starting to have profits, but then the trade came below our entry price, and so we were at a drawdown. However, we had a safe stop loss, so it was not a problem. And then the price moved towards the expected price direction with huge displacement. Okay, so let's see that part. So we initially target a 1 to 2 risk to reward because there was buy side liquidity above this swing high. So we targeted that. So we took partial profits over there, and then we left the trade to run for the next liquidity residing above. Let me show that to you. Then the rest of, after grabbing 1 to 2 over here, we left the trade to go and grab the highs of the previous Asian session. So that was a 1 to 3.5 over here. So we left the trade to run until up to that point. So you can see it clearly in the 15-minute chart. Now I'm in the 15-minute chart. This is where we entered the trade. This is where we took 1 to 2 above the swing high over here, and we left the trade to run because we were expecting the price to go and grab liquidity above the Asian highs, because our daily bias was bullish and we were looking for the price to go up to this point for the daily highs liquidity to be taken. However, price came and grabbed this buy side liquidity, giving us 1 to 3.5 risk to reward ratio. Okay, let's see what's next. Also, this is that daily highs we were targeting. However, the price did not reach that. Is that okay? Yes, that's fine. Why is it? Because it's a bias, like we were looking for bullish buyers targeting this. it did not clear the buy side liquidity here. It it could get cleared on another day. However, the overall goal for the day was to be bullish and take a buy side entry, and we, the trading team at Trade Oxygen, we achieved that, and that was the end of the trading for the day for us, and we grabbed a 1 to 3.5 profit in a few hours of trading with proper sound logic. Okay, so if any of the terms we mentioned here were not clear to you, or if it were new, don't worry, subscribe to the channel and click the bell icon. We will release simple videos soon explaining each of these terms and concepts. What we wanted you to feel in this episode was that trading can be done with proper logic, analyzing the charts in a sound logic. And we will release an updated 2024 course for you to get it as well. So that's the end of the video, and we will see you all soon in another market analysis session soon on Monday in 2 days time. Until that, stay safe.